Okay, guys. Good evening and welcome to tonight's session. In so far, we've been able to cover quite a number of things, and we've been making progress. Okay, that's just what I want to say. We've been making progress, and I'm actually happy that we've come this far. Fortunately, we would be getting to that part where everybody have been waiting for very soon. That part where where I'll start telling you that when you see something like this, then it means you should enter. This is where you should put your stop loss, and this is where you should anticipate as take profit. This is where price wants to go. This is how to know direction. All those things that makes you know trading what it is. And we are building a line of thought towards that direction. We can't just jump and say, oh, because of that's what we want to do, we should just jump and start away right away. No, we need to understand what brought us to that point. Yeah, so um let's get down to today's topic. In our last class, I was able to explain candle deeper. We're able to go deeper into what a candle is. I was able to show you that the based on how orders flow. Yeah, every high of a candle, regardless if it's a bullish candle or a bearish candle, every high of a candle means that the the askers were buying in, they were selling into the liquidity that have been provided by the bidders, while on every low, that's every week low from that open, from that, you know, from this in a candlestick, this open or close could be or the open, it could be closed, but around this week low, the whole week, the whole week that makes the low of this of any candle is hinting at the fact that bidders were buying into the liquidity that were provided by the askers. Okay, now, and I was able to explain the type of you know uh, what's it called now, participant, and what they do. Okay, their business, the business of askers is to is to look for high price, while the business of bidders is to look for um, cheap price. They seek to buy at discount. Yeah. And if at every point in time one of them will be in control, aggressively buying into the other person. So for every buy there must be a sell, for every sell there must be a buy. That's how markets move. Okay. So when aggressive buyers keeps on buying into the liquidity provided by the sellers, which is the askers, it it hints at the possible fact that okay, this is what is happening, price is bullish or not. So tonight we'll be diving deeper. We're still talking about price, and there is no how we talk about price and we will not reference candlestick. And the reason is because, like I taught you, candlestick is what has helped us organize price. It's what has helped us organize price. For some of you, you might not be comfortable with graph candlestick because by the time we are done with the market business model, you realize that you can trade with any type of chart. Yeah, line chart, bar graph, footprint chart, whatever chart you can trade it. You can trade with it because the market business model is um, we don't focus on candle formation or candle pattern or all those things or repetition of whatever. No, we focus on this thing called price, and that price is the same on all time frame, on all chart, on all candle, on anywhere in the world. The Me that I'm in China, if price is currently at $5 on AUD USD, me that I'm in Nigeria rather, if price is currently at $5, if there's somebody else in China, he will be seeing price at $5. Okay, but he might be using another thing to see price, but the point is that price would not change. Okay, So time frame is what gives meaning to price, what helps us organize those prices so that we traders can easily know how to make sense of what to do, how to analyze and anticipate where price will move into. Right now, in tonight's class, I'll be going deeper into that, into price, and I'll be teaching you some other things still in line with other flow as I've been teaching you. You understand? So there are still other things we will definitely cover, but for now, let's deal with the one that is next in line to be dealt with. Okay. Um, you see, um, let's deal with time. Okay, because I cannot speak. I cannot. Yes, I've spoken about time based on time frame. Yeah, but this I feel like I should teach you guys time based on how it is in the world, how the world time, world WRLD affects price and how we MBM traders sees it. Okay, um, this would not be necessary, of course, but then I realized that at the end of the day, when we want to start analyzing, we will not go to another universe to start analysis, to start analyzing. We will not leave Earth and go to Pluto to start looking for exactly. So we need to understand what is happening, so that we at the end of the day we can be able to, so that by the time we get to that point whereby I start showing you some of the things on the screen, you won't get confused. You understand? You already know every, like I can just open my screen and you already know everything that is showing on my screen. I don't have to start explaining enough. So let's go deeper. Now, one of the tools that we use as trader is something called time. I've talked about price, but now let's go into time. I've talked about time frame rather, but now let's go into time, the whole idea of time, time frame, time stamp, time, whatever, anything about time. You see, the forex market hmm, is like a company. The whole market is like a company because, as I've taught you in MBM 002, I said there are factors in the economy. Okay, there are factors that influence the economy. I spoke about government. I spoke about religious organization. I spoke about central banks, and one of them that I spoke about, and then our focus is market. Another one is market, yeah, and our focus is market. So market is an institute of the economy. It is in the economy. Hmm? Good. It means that there is nothing that happens in an economy that is not influenced by the market or the market does not influence it. Let me explain. When you are in long, when let's say for example, based on for some reason, let's go back to 2020 when the pandemic broke out. You saw that the whole market was crashing. Yes. Now it was the economy that was affecting the market. Good. And there are other times when the market in itself affects the economy. For example, during time of inflation or deflation, where you see the price of commodity just go up anyhow, that is market. And because of the price of commodity are now going high, you begin to see other sector in the economy will start crumbling. And if the market is doing very well, you see other sectors of the economy start rising. You see how markets also influence the economy. So both of them influence each other. In our own case, and you see the influence of the market, either the market influencing the economy or the economy influencing the market, is what causes inflow and outflow. The market is there on its own. It's there. Let's imagine this is the market. I've explained the market to us. Go to MBM 02, 304, I can't remember where. Now, if the government wake up one day and they say that they are increasing the price of fuel or the price of petroleum, what do you think? It will definitely reflect on the market, right? It will affect the market. Was it the market that changed the price of fuel? No. Who changed it? The government, right? So what would that cause? Since they have increased the price of fuel, majority of people will want to buy fuel. They want to buy fuel and keep, or so that they can make profit and all those things. Different factor. The point is that there's going to be inflow into the market. You see that, right? Inflow now means money is going to come into the market. Okay, liquidity, creating more liquidity, right? Good, making the market liquid. When it gets to a point, definitely it will start dropping, but that's not where we are going to. At the same time, when it is December period, and it's during December period is time whereby people want to spend a lot, and one of the commodity that many people buy is the Father Christmas costume, yeah, or sweater, for, like, for example, here in Nigeria, um one of the commodities that sells most is all this seasonal stuff like the Father Christmas cap and all those things, yeah. And in the United States or Canada, one of the commodities that will sell most is sweater, or something that keeps the body warm. The price of thermostat would also increase. People would definitely want to keep their house warm during those periods. So fuel price will also increase. But that's not where I'm going to. Let's just pick the outfit. So during December period, you see people start buying um so many clothes, so many outfits, getting ready for the to celebrate the season. What do you think would happen? It will affect the economy, okay? Because of the increase in the demand for that particular commodity, it will reflect on the economy. It's either there will be shortage or there will be so there will be more supply of that thing. And one way or the other, it's going to affect the economy. During seasonal period like December, you begin to see that companies start closing up. A lot of things are just rounding off. You will see it in the economy. There will be more spending than earning. That means there will be more outflow than inflow. People are spending more than they are earning. I hope you get what I'm trying to hint you at now. So, inflow and outflow is a function of other things. Every other sector in the economy contributes to inflow and outflow. The central bank might decide that they want to pump money into the market. It causes inflow. They might decide they want to remove money by quantitative tightening. It will cause outflow. I'm going somewhere. I'm explaining something to you. Please follow up. We are going somewhere. Good. I'm not the kind of person that explain and just jump ahead. Anything I explain, I've understood it very well and properly. And I try to start from the basic, the scratch, the bottom, the bottom, so that by the time we get to that point where we now get to that thing that I want to show you exactly, you will not be asking me question again that I should have answered for you. You understand? So let's proceed. Now, since you have understand that how outflow and inflow happen in the economy, in the market. Now, you see this market, like I said, it's like let's imagine that it is like an office. Hmm? It is like an institute. It is like an establishment. Hmm? Good. Of an economy. Economy now could be a country, it could be a continent, it doesn't matter. That's now, because of this thing is an establishment, there are something we call um there's a word for it now. Um Mode of operation. Yeah, that's the word. Mode of operation. How does this market operate? And this mode of operation is not objective. It is not something that I can say, what when I'm teaching you price now, I can tell you, oh, this is how MBM trader sees price. It is objective to the way we see it. We MBM traders see it, yeah. But you see, the modus operandi that I'm about to show you is not subjective or objective. It is what it is. It is a fact. It is a principle. It is there. Nobody can change it. Nobody can remove. Nobody can cancel it. If you see somebody tell you it's different from what I'm going to show you, tell the person to prove it. If they cannot prove it, they're telling you balderdash. I hope you get what I'm saying. It is static. Now, what is the benefit of knowing this modus operandi? It helps us to know inflow, when there will be inflow and outflow, so that we can position ourselves properly as traders and make money. Remember, that's our end goal, to make money. Good. Now, so you see this box that represents this market, it has the way it operates. One of the way modus operandi is that this market opens from Monday and close on Friday. How many days are there in a week? 7, right? But this market open only 5 days in a week, with exception to some days whereby it opens maybe 2 or 3 times. For example, the week of Christmas, the market only opens for 3.5 days. The week of New Year, the market also opens for 3.5 days. There's also another week, I think that's Independence Day, that's US Independence Day, I can't remember, that the market also opened for 3.5 days in a year, in a week. But the standard day that the market opens is 3.5 days. I'm sorry, 5 days rather. Okay? 5 solid days. Now, let's proceed. Yes, okay. Sorry for that little break. I had to attend to something so that I don't get confused. Yeah. So let's proceed. Um. So one of the modus operandi or mode of operation is that this market opens from Monday. So I'm going to use this line that I'm putting here. It's gonna represent Monday. I don't know what's wrong with this. Why is it like this? Sorry guys, let me reload this. Um, I think these guys have started with their. I just hope this is still recording. Still recording. Yeah, let's. I'm not gonna cut this part to me. I don't know how to edit, so you guys should follow up on what I'm showing you on teaching you. Okay, let's see if it's gonna work now. Yeah. So let's get back to what I was showing you guys. Okay, what I'm teaching you. So, like I said, the market opened from Monday to Friday. Now, on Monday, let's use this line to represent Monday, and then let's use this line to represent Friday. So Monday open to Friday open. Good. I'm teaching you this because of you will need it in the future. If you like, say you won't, say you don't need it, okay? It's not my fault. Please follow up. Now, Monday, how many weeks are there in a week? How many days are there in a week? 5 days, yeah. But this market only opens Monday to Friday. So this is the modus operandi. I'm sorry, the mode of operation. Now, normally, logically, the market does not close. It's never closed, even on Friday, Saturday, and Sunday. Based on my explanation of the market that I gave you, the market does not close. But remember, I told you this is the mode of operation. So, mode of operation that is the way it is. We can't do nothing about it. That's how it is. You get? We know that it does not close, but this is how it is. So we have to learn it. Okay. So let's say this is Monday, this is Tuesday, this Wednesday, this Thursday and Friday. So Monday, Tuesday, Wednesday, Thursday, Friday. Good. I'm just trying to explain something to you. So let's proceed with what I'm teaching you. Now this is Monday, Tuesday, Wednesday, Thursday, and Friday. Good. Let me drag it up a little bit so that, yeah, good. I think this is okay. So Monday, Tuesday, Wednesday, Thursday, Friday. Now you see, Monday, Tuesday, Wednesday, Thursday, Friday have their own characteristics. We call it characteristics. The same way this market's mode of operation is that it opens when? In a week, it opens Monday to Friday. Then it opens, if you want to go higher, we can say then it for the whole 4 weeks in a month, then this market opens 5 times 4, that's 20. So in a month, this market opens 20 times. Okay, so we know all these ones. These are just simple calculations that you can do. Now, each day, you see, each day, Monday, Tuesday, Wednesday, Thursday, Friday, have its own, each of them have their own characteristics. Now, there are two types of characteristics. There is the one that is general, and there are some that are particular to each day. I'll start with exposing to the one that are general, and then we'll move to the one that is particular to each day. But each day have their own character, the way they also operate. Is the way the market have its way of operation, each day have its own. Okay. The same thing in a month, each weeks have their own way too. But we'll dive deeper into those ones. Let's sort this daily one. So let's look at a day. In a single day, what happens in a day? Now, the first thing that happens in a day, now this is general with every single day of the week that the market is open. The first thing is that what's it called now? There would always be 3 sessions, or there are 3 sessions. Now, this now brings us to explaining what is session, trading session. What are trading sessions? Trading sessions are time of the day in the 3 major markets of the world, which is Asia, Europe, and Asia, London, and New York. Now, I will explain that. And I need to explain it for you to understand why we call them trading. Why? There is trading session in London. In Spain. Spain is a country. Japan is a country. And there are other countries. In Vietnam is a country. But why is it? Why did they pick special locations in the world as trading session? So in a day, there are sessions. Okay. That's the first thing, that every single day, Monday, Tuesday, Wednesday, Thursday, Friday, there will always be trading session. And these trading sessions, there are 3 of them. We call them, the first one is Asian session. Second one is followed by London session, followed by the third one, which is New York session. Now, you see, Asian session. Okay, before I tell you about Asian session, let me explain what session is. Sessions are when volume comes into this market. That's basically why sessions work. Why we, is why session act as a mode of operation in this market. When volume comes into this market, let me explain. You see, when a new day starts, a new day that starts, it already starts from Asia. Asian are in the whole world are the first set of people to see a brand new day, okay, followed by London, and then New York is the last. Okay, so while Asian is in 7 o'clock in the morning, London might still be sleeping or about to wake up, and New York is still in the evening. So why Asia might be on Thursday, New York might still be on Wednesday. Okay, based on time. This is what creates time zone. I'm not here to explain time zone to you guys, but this is how it works. Okay, now in Asia, once a new day opens in Asia, the trading volume there, I mean, people start trading, people start buying things, people start, the market is open, people start buying things, stocks companies open, commodities companies are open, people are buying, people are selling, transportation, marine, a lot of things are happening already. That means there is already volume, activity happening. Activities are already happening in Asia. So I'm going to represent this box as Asia. Activity is happening. Now, it means, now since activities are happening, it means there will be volume, right? And so this is the first thing. Now, after Asia is London. You see, the same explanation I gave to Asia is what happens in London. By it's a particular time, London too, they are in the morning. What happened? They resume their own work too. And the same thing, when it gets to a particular time also, New York, they wake up and they continue. Now the question is, why is it Asia? Why not another country? That's because Asia is one of the geopolitical zone in the world that carries so much. They deal in I mean, their volume is massive. Number one. Secondly, they are the first people to see a brand new day, and thirdly is because of Bank of Japan, which is one of the biggest bank in the world. So we know that these guys mean business. Tomorrow, if let's say all this feature that Asia have comes to Africa, Africa will become one of the time zone that we have to pay attention. I hope you get what I'm saying now. Good. Now, there are times that are bound for Asian, London, and New York. Okay, we are going into time now. Asian session opens at a particular time and it closes at a particular time. Why? Because by the time Asian session open at a particular time, yeah, and it's closing at that time, it means that the Asian continent, they are done with their trading for the day. They are already packing their bag and they are going home, ready to resume for the next day. The same thing for London. There's a time they open. Once they open, there's volume, activity, a lot of things happen. And when it gets to a time they pack their bag, they go home. And the same thing for New York. So I'm going to give you the time. Now, please pay attention. It's very important. And this is where you have to go and do your research. I'm not going to give you this. Now, you see, the Asian continent they have their own currency. I've explained it to you in MBM that we deal in currencies. Yeah, exactly. Well, I pity those of you that like to skip classes. This is where this is where I'm very happy, because this is where many of you are going to now have to Go back and go and watch those classes. For those of you who did not skip, you definitely, and you have your notes, you definitely understand. Just go to your notes and reference what I'm showing you. It's in Asia, there are currencies they spend only in Asia. One of the currency is is yuan, Japanese yuan. You know, Japan is in Asian continent. So one of the currencies they spend there is the Japanese yuan. I hope you get what I'm saying. Then there are others. So it's for you to go and do your research that what are the currencies that are spent. Now, this is how you do it. You can ask AI, what are the currencies that are spent in Asia that are spent in Asia that what's it called now? What are the currencies that are spent in Asia that's traded in the forex market? You can ask it that way. The same thing for London. They don't spend yuan in London. So there are currencies that are pertinent to London. The same thing for New York. So you do your research on that. Okay. Now, once you've done your research, it doesn't matter. You understand where I'm going to. Okay. So we don't in London, in Asia, we know we have the Japanese yuan. In London, we know one of them is the British pound, yeah, or and you know in New York we have the United States dollars. Yes, these are major pairs that we trade in the market, but you guys should still do your research. Very important. Okay, do research. Why I ask you to do your research because at the end of the day, all my students will be trading different pairs. All of you that will watch, it's not the same pairs you will trade. So it's better you do this research on your own and get familiar with that thing that you pick. Now, I'm showing you the what I've been explaining since is I just pick a singular day out and I'm showing you what's happening in that day. So from Asian open to New York close makes 24 hour trading hour. So I did not say 24 hour, 24 trading hour. So once Asian open, the trading day have started. Once New York close, the trading day is closed, it's done until the next day. That means if Asian open by, let's imagine 12 a.m., it's imagination. That's not the time they open. I'm just imagining. Let's imagine they open by 12 a.m. and New York closed by 5 a.m. Yeah, that New York closed by 5 p.m. Then that is the whole trading day. We are done for the whole of the trading day. We have to wait till 12 a.m. when Asia open again until when New York close. So you see, trading day and the normal 24-hour time is different. Now, I'm going to, based on seasonal tendencies, the time that Asia open is different from the time that, you know, like for example, once we get to November, once we get to November, the time changes. Okay, I think I'm gonna have to teach this probably later in the class, but for now, no. For now, I don't want it to hold us down. Okay, so let's just proceed. Okay, now now let's proceed. Once Asian open, it comes with volume. Once New York open, it comes with volume. I'm sorry, London open. Then once New York open, it comes with volume. They all come with, you know, they are all volume. They have the volume. Now, of course, based on the currency, okay, currencies that are now traded in Asian sessions. I'm still teaching. This thing is I didn't know it's gonna be this long, but I want to be very detailed. Now, you see, currencies that are traded in Asia would most likely have more move during Asian session. So after doing your research, you see Japanese yuan is a currency that is traded in Asia. Yeah, during Asian session, they will definitely have more volume. They would move a lot. unlike a currency that is traded in London. Why? Because they don't trade London currency in Asia. They only use it for exchange, but that's not their mode of exchange. They exchange their currency they might exchange their currency to London currency and exchange it back, but that is not what they used to do. For example, if you want to buy something in Japan, you cannot use dollars, you have to use Japanese yuan. If you want to sell something, you cannot collect dollars, you must collect what? The Japanese yuan. That's what I'm saying. So every currency that is traded in Asia, every currency that is in every Asian currency, yeah, would always, okay, have volume during Asian session. Every London currency, like the euro, yeah, would always have impulsive moves. Much volume. Volume will come into inflow. That's what inflow. And then now, you see, and the same thing for New York, right? Once New York open, every currency that's traded during every currency that is pertinent to the United States would every United States currencies would definitely have their own either currency or commodity or index. The point is that volume is what we are paying attention to. Okay. Now, let's proceed. I'm explaining what's happening in a single day. We have not even gone to. Anyways, it's very important to understand this because if you don't understand this now, by the time we go to the chart, you'll be confused, and I don't want you to be confused. Okay, so let's proceed. At the end of the day, it would not matter, and I will teach us how to easily know them. But what's the essence of me just jumping to that part when you don't even understand the intricacies? If somebody asks you tomorrow now that, okay, why are you trading? Why are you waiting for London to open before you trade? You say it's because my mentor asked me to. No, no, no. I'm not that. I will never be that kind of mentor. Or that no, that's ignorance. I will teach you why it is. Okay, so please follow up. Now, now there is something about each of these trading sessions. Hmm? You see, if Asian session opens, volume would kick in and you begin to see impulsive moves. That's when you see my price move like so many pips and all. You see price move up or move down depending on who is in control. Now, the moment we are getting to the closing of this session, around the closing of this session, and once this session is about to get close, the volume will reduce. Not that it will stop, it will reduce. And then this one would. The next session, which is Asian and London session, will start showing impulsive moves too. By the time we're about to end London session, volume will reduce. New York will start showing impulsive moves. By the time New York is opened, Asian are already sleeping. So there's basically no volume. Volume does not stop, but it's very stupid to be trading Asian pairs at that period. Exactly. By the time Asia open, New York pairs don't really move. By the time London is opened, yeah, by sorry, by the time Asian is open, London pair does not move that much. Okay. Now the pair that binds both of them is the London session. But we'll talk about that one. But I hope what I've just explained to you makes sense. Asian session, volume comes into the market, reduced by the time we get to London session. And London, by the time London is about to close, volume reduce also jumps into New York. By the time we are in New York, Asian session volume is drained already because there's no more activities and whatever happening in Asia. Okay. Then we go back to Asia. We rinse and we repeat that. Okay. Now, this is what happened in a day. A trading day starts from Asia and close New York. So from Asian session open to New York close is, so every open of the day, opening price of the day would be created by which session? Asian session. Closing price of the day will be created by which session? New York session. That would all, this is another fact. Nobody can fight this. This is the fact. The opening price of the day must be, it will always be created by Asian, except maybe if Asian is not good, maybe they are in holiday. Except that Asian sessions are on holiday. So there are times whereby there is, like during the Dragon Year, New Year, Asian is not open. The market is not open. It will have to start from London. That's when London makes the opening of the day. But the rule is that Asia will make open while this. Now, if Asia makes open and New York makes the close, you would most likely want to guess that London will make the high or the low, but that's not how it works. That's not how it works. Yeah, sometimes the high will be in Asia, sometimes it will be in London, sometimes it will be in New York. Okay, that's not how it works. But the rule is that Asia will make the open and New York will make the close of the day. So in a bullish scenario, in a bullish close day, a day that closed bullish, the opening price starts here, closing price stop here. The day that closed bearish, opening price starts here, closing price stop here. Okay, just shown you, just explain to you what happens in the sessions. Just explain everything to you, everything you need to know about the day and the sessions. Okay. Now it is now your job to go and do your research on which of commodities, which of the currencies in these sessions, Asian, London, and New York, which of their currencies, okay, which currencies is being traded, which currency in this forex market is Asian currency, which currency in this forex market is London currency, because there are many currencies in the world that are London currencies, but they are not traded in the market, or we don't trade them because they are exotic. There are many currencies in this market that are, US currencies, or commodities or index and a lot of things that we don't, you get. Now there are commodities that move during New York session. Some moves in London. This class is not for that. Maybe in our coming class I will show you that. But this is just to explain to you what happens in the forex market. Now there is something we call a phenomenon in this market. And this phenomenon, we call it overlapping. This is when sessions overlap. Overlapping means this session have not closed, then this one now open. And you can only see overlapping between two sessions. Between, in London, most time it's London, because Asian sessions sometimes will not close and then London will open. So you see them, they will overlap. And London would not close sometime and New York would open. And then what you see there is they overlap. Now, this overlap period point in time is where many people or many traders tends to look for entry. But it's not usually like this. It's not usually correct though. But the point is, this is basically what the industry what have been fed in the industry, and they refer to it as Q zone. Because these are where two sessions overlap. Now imagine Asian session has its own volume, massive volume. London session have its own volume. Now imagine two sessions coming together in a time frame. What do you think? There will be much volume during those periods. The same thing here. London session overlaps New York. Both of them have massive volume. You see this overlapping period? That is when the market opens. Hope you get what I'm trying to say now. In some scenario, New York will overlap with Asia, but not most cases, because we don't really pay attention to that though. Okay. So the only overlapping that happens that traders pay attention to is the one that happened between Asian session and London, and London and New York. Overlap. Now, when do they overlap? That is where time frame is very important. When does Asian session open? When does it close? When does New York open and London open? When does it close? When does New York open? When does it close? Now, Asian, already we know that Asian session starts the trading day. Now we are in January. This is January. So the trading day starts from 23 o'clock West African time. Convert that to your own time. That is UTC plus 1. So it starts from 23 o'clock or 11 p.m. That is when a new trading day starts. When a new trading day starts. So you see this line I put here that I call Monday open. What is it? It is 23 o'clock. So if I ask you this one now, what time is it? You can easily say it's 23 o'clock. This one, 23, 23, 23, 23 o'clock. You see how you have now, you don't need to start finding, oh, what time is this? What time is this? You see that now based on my explanation. You see how everything, at first, it will look like, somebody is explaining long story. But at the end of the day, it's just to help you easily identify and understand. Start from 23 o'clock. Now, we already know that New York closed. So New York closed by what? 22:59. So by 22:59, New York is closed by 23 o'clock. So it's just like one minute difference. Even in fact, it's not that, in fact, it does not close, but let's just give it that 1 minute difference because we are dealing with a daily time candle here. You get so 23 o'clock to 22 o'clock makes 24 hours. That is a trading day. When we get to March, is it March now? March or April? I can't remember. It's going to shift to 10 o'clock minus 1. It's going to shift to 10 o'clock. By the time we get to that part, I'll host a class, or I will definitely drop a video explaining that and how you should start trading as traders. But for now, market opens, Asian session opens 23 o'clock. That's when market opens and it closes. Now, if Asian session open by 23 o'clock, when does Asian session close? Now, every trading session has 8 hours of activities. At least 8 hours of activities. At least 8 hours of activities. Okay? At least 8 hours of activity. So that means from what's it called now? From Asian session open from 23 o'clock to whenever it's going to close, it is 8 hours. From London open to where it's closed, it is 8 hours. From New York open to where it's going to close, 8 hours. But it's not like that. Now, this is why the market is very interesting. This is why I love the market. It's not usually like that, but basically that's the time frame. If we are referencing them as candles, that's how we see it. Anyway, I should not have said that. Don't worry, we'll get to why I said that anyway. But based on the way it is, Asian session opened from 23, and it closed by what's the time now? 9 a.m. I think that's about 10, Abi? Yeah, that's about 10 hours. Okay, so no, is it 9 a.m.? No, 8 a.m. Sorry, 8 a.m. Yeah. So it opens by 23 o'clock, 23 in the 23 p.m. That's 11 p.m. 23 o'clock, and it's closed by 8 o'clock. 8 o'clock. West African time that I'm talking about. I'm a Nigerian trader. If you are in the United States, you're watching this, please convert that to United States. If you're in Canada, convert it. If you're in Japan, please convert it to your own time frame. Okay, sorry for that. Now, it opens, Asian session opens 23, closed by 8 in the morning. London opens by 7. That is 1 hour before Asian close, and it closed by 15 o'clock. Okay, then New York opens by 14 o'clock. That is 1 hour before London close, and then it closed by 23 o'clock, and then it repeats like that. So to make us to easily reference these sessions, let's color the candlestick accordingly. So for the Asian session, I'm going to leave it as this orange color. For New York session, from open to close of New York, I'm going to color it as, I'm going to give it, what color should I give it? Let me give it green. So it opens 7 a.m. and close by 15. So 15. And then New York opens by 14 o'clock. Let me give it blue, and it closes by 22:59, which is about 23 o'clock also. And that's the same time that these guys are opening. Okay. And what's it called now? The Asian guys are opening also. So orange for Asia. So from here to here, Asian session. Now you see, London sessions is this green color, and see where it started from. 1 hour before Asian close. That is the overlapping session. That's when session overlap. And then from here to here, that is London open to London close. And then New York opened before London close, 1 hour before London close, then close here. And this is how a day time frame. So you see, Monday, this everything I've shown you here is like we are zooming into Monday. So if I ask you what happens on Monday, you say first it opened by 23 o'clock Asian, and then closed by New York 23 o'clock also, but let's say 22:59 New York. And another thing you can say is that Asian session closed by so time, London session opened by so time, and closed by so time. If I ask you all these things, you know it. Now, how does this affect us as traders? First, now we understand how every day happens. So the moment you are coming in a day, you are not foolishly trading as if you're not foolishly looking for what is not lost. If you are trading, let's say, gold, you know that you have no business with Asian session, because why? Gold is not Asian session commodity. If you know you are trading, let's say, USD CHF, you know you have no business with London, because it's not London pair. If you know you're trading Euro USD, you know you have no business with Asia, because it's London, and it's during London and what's it called now, New York, that most volume comes into this market. Yes. So it helps you to sleep, as you have good enough time to rest. You plan your day as a trader. It helps you to plan your day. I'm posting, check the time that I'm recording this class, 22:53. That's because I'm done for the day. How? Because I understand how the day operates. I know that there is no massive volume that want to happen, except maybe there is news release. Finish. But aside that, nothing. I'm teaching you this now so that you will have it as a knowledge, because we use it as in MBM, we use it. Although we don't rely fully on it, because of it has its own downside, which I will show to you, but we use it. So this is what happened in a day. Now that we understand what happens in a day, it makes sense that we know when the open and the close of a day will definitely happen. We know which time it will happen, but we don't know at which price it will be. You get what I'm saying now? But the funny thing is that you can know which price it will be. This is where MBM comes into view. Yes, MBM will show you where price it will be. Now, the high and the low of the day, well, that one will be talked for another day, because I don't want this class to be very long. How can we know the high and the low of the day? What happens in this day, etc.? Do you know why I'm teaching you this? So that by the time we start going deeper into candlestick, You are not confused why one candlestick is longer than the other one. And when one candlestick engulfs the other one, they will not tell you it's engulfing pattern. It's not engulfing pattern. It's because of the way the day is, the day is. How the day operation, mode of operation works. Now, as much as we have now know what is general to all this day, we also need to know what is particular to each day. What happens on Monday that does not happen on Tuesday? What happens on Tuesday that does not happen on Wednesday? And like that, like that. What happens? And that is what I'm going to be showing you in tomorrow's class. Okay. I think I've spent about 55 minutes. Yeah, we have spent a lot of time, and I don't want this class to be too long. Okay. So in tomorrow's class, I'll be showing you how each of these days are particular. Do you know why I'm showing you this? It's because of, for me to explain the next thing, you must understand this. The next thing about price that I want, that is in MBM, you must understand this. You get, it's not because of I just feel like, no, if I just jump to that one, you don't understand. I mean, I don't want to now come back and be asking questions and everybody is confused. I don't even know where to. So I want to take our time and let's learn, okay? That's it. I hope this helps you to understand sessions of the trading day, what they call cues and all those things, and help you to know that when volume comes into the market. And we'll still talk deeper about volume by session, because volume by session and volume by price are two different things. Hey, we'll talk about them. I'll teach you everything. Okay, don't worry. You are here. You will learn. You'll make money. You'll be profitable as a trader. So we'll meet in our next class. Have a wonderful night rest.